Hi, very good morning, and welcome to this Omni Talk series. And wish you all a very happy Diwali. And so we are celebrating Diwali today, and it's a festival to celebrate wealth. And I'm joined by my colleague Dr. Vikas Gupta. Uh,
Hi, happy
Vi-
Diwali, everyone. Happy Samvat 2079.
Great. So today, the discussion we wanted to, keep it around wealth, but the wealth of the nation, and we are talking about India. So India is already one of the largest economy, by GDP. We are the fifth largest economy in the world. And interestingly, in next few years, let's say by 2026 or 2027, so there are four countries right now ahead of us. US, China, Germany, and Japan, and we are hopefully expected to go across Japan and Germany and become one of the three largest economy, right? And that's where we are. But are we really wealthy? Being one of the top three or top five countries in the world, and that is the question that in spite of being one of the largest economy, we don't feel that wealth around us when we compare to any developed nation. And that is the question for today. And I want to put it to Vikas that where there is a disconnect in this whole equation.
So great question, Ashwini. And it is, of course, a puzzling concept to many people that despite us being already one of the largest economies in the world by GDP, right? I mean, so we are already at 3.5 trillion and number five, as you mentioned. And in the last episode, we discussed, right, Bharat Ka Amrit Kaal, that by 2047, we are likely to be somewhere in the range of 40 to 60 trillion in the base to optimistic case. So averaging at 50 trillion, right? And we said we could be a 50 trillion plus economy. So the question naturally comes to people's mind that even if now at number five, it doesn't feel wealthy, then at number one, two, or three, which we could be, right, in different scenarios, according to the simulation last time, uh, in 2047, are we going to feel wealthy? And naturally, the answer to that would look at something called the GDP per capita, right? And you are of course aware, but and many people, most of the audience would be aware, but there will be a small group of people who would not be familiar with the concept of GDP per capita. So it's basically the country's GDP divided by the population. So naturally, our population is so large, probably 1.4 billion by now, that the GDP per capita comes out lower, even though we are top ranked on GDP, overall GDP. So right now, to set the context, our GDP per capita is about $2,500. So $2,500, which is somewhere at the same range where China was in 2007 or so. Okay, so we are at that place where China was around that time. And now another piece of information I'll share, which will help you understand this, is the World Bank classifies countries according to this criteria. So it divides the all the countries into three groups, three primary groups: lower income, middle income, upper income, right? And the lower income is everyone below $1,000 per capita. So we are naturally not in that anymore. We are already at $2,500. And then the upper income is more than $12,000 per capita. Okay. Everyone else, which is majority of the countries, nearly 75% of the countries are in the middle income. And that's why they've divided the middle income again into two parts, which is 1,000 to 4,000 is lower middle income and 4,000 to 12,000 is upper middle income. Now, today, India with 2,500 is in the lower middle income with countries like Vietnam, Ukraine, and Iran. Okay. And upper middle income is China, Brazil, Argentina, Russia, etc. And above that, upper income, of course, we all know, which is all US, Germany, Poland, Greece, Portugal, and all those kind of countries, Hungary, and so on, right? US, etc. Japan. So this is the broad grouping. And Ashwini, I
Yeah.
think you have some very interesting simulation you can show, which will be very interesting to people. And just to complete, what I mentioned just now is technically GNI per capita, the classification by the World Bank. But typically GNI and GDP are very, very close for most countries. So I don't think it's a very important distinction for our point of view.
Great,
So
fantastic. So I'm going to play a very short simulation of the GDP per capita for across various scenarios that we have built. Where the last week the discussion around GDP numbers for a while during the Amrit Kaal, and so we are
So,
starting
so,
with
so
somewhere like okay,
bottom right hand corner is the year, right? That will keep changing.
right.
And base case is the yellow in the middle. So that is the most important one, right? Base case to
So
keep an eye out as you play the simulation. Perfect.
So let's just take a pause at 2030, which is like out in the longer Amrit Kal, this is a near future, what we are looking at. And the pause is important because just to look at the numbers in this context, the base case, you can see we are nearly $5,000 GDP per capita. Uh, Most conservative scenario also we are 4,300, and obviously the most optimistic we are around 6,600. Now the important point is that we are already transitioning by 2030 from being a lower middle income category to a upper middle income category, and the category that Vikas just talked about. And let me play this and let's go to till the end.
So somewhere around 2040, we cross the 12,000 kind of levels. Okay, super. So so
Yeah.
96 57,000 is the most aggressive scenario, and base case is $36,000, right? Sorry, base case is $23,000. Optimistic is 36, and the very conservative is 14,000. Conservative is 18,000. Interesting. So if we take the base case at 23,000, that so in practically the all the cases we are somewhere in the upper income range, right? Uh, by 2047. Uh, so that is clear that practically in all the cases we will be in the upper income. Uh, in the very conservative case, maybe on an inflation adjusted basis. So right now, what is 12,000 would go up, right, with inflation, global inflation, dollar inflation of around 2% per annum. That would go up slightly. And I would say about 3 to 5 more years. And even in the very conservative case, we would be in the upper income. All right. So by 2050 or so, if not 2047, in the very conservative. But if you take the conservative, base, optimistic, aggressive, in all those cases, we are already in the upper income group. Uh, and interesting point is with 56,000, 57,000, you are ahead even of countries compared to today, even countries like UK, France, and Germany, right? I mean, that's very interesting. Then in the optimistic case of 36,000, you are still ahead of today's levels of Spain, Italy, and Japan. And in the base case, you are in the same group as Portugal, Greece. In the conservative case, you are in the same group as Hungary and Poland today. And in the very conservative case, you are somewhere like Russia, China, Brazil of today. Okay, so this is very interesting that in nearly 80% of the cases, it's likely that Bharat will be a developed upper income economy. Over to you, Ashwini, your thoughts.
Great, great. Yeah. So the next question, as investors in the stock market, and we talked about this investment opportunity. So the thing is that how do we benefit from this as investors? How we can take advantage of while India goes from developed nation to upper middle income country to a higher income country? How as investors we can benefit this from this trend? That is something if you can talk about, Vikas.
Yeah, so see, last time also we discussed the Omni Bharat Amrit Kaal, right? We have designed this portfolio which is riding on a number of growth vectors. So we discussed the four main growth vectors which were shared in the budget, right? Union budget 2022 of Government of India. Um, so in that budget, there were these 4 points of PM Gati Shakti, inclusive development, productivity enhancement, and sunrise sectors. And then finally, there was the financing of investments, right? So with these four primary growth vectors, and then we had identified two more in this portfolio. Right now, there are six growth vectors. So there is the Bharat Defense, Atmanirbhar Bharat, right? I mean, in defense, and then there is the one more growth vector we have, which we have included. So there are a total of six growth
So
vectors we have.
clean tech, yeah.
Clean tech, yeah,
So,
sorry. So clean technology, and in terms of sustainable development and worldwide ESG goals, it becomes very important. So these six are the current growth vectors, and you can head over to the small case on omniscience.smallcase.com and look for Omni Bharat Amrit Kaal. And that's a way to start. See, today is Diwali, and it's a time of wealth building. And we think somewhere 2079 is the perfect time to start building your wealth with Omni Bharat Amrit Kaal, provided it suits your investment objectives and risk profile. And of course, you have to consult your financial advisor for this. But if it's suitable for you, if that matches, then the point is to have a significant lump sum allocation to Omni Bharat Amrit Kaal, because that's like a core allocation. And then you can do a regular SIP on it, in it. And by the time 25 years go by and you are probably retiring, you are also, becoming wealthy in parallel with the whole of Bharat. Uh, that those are my thoughts. Ashwini, you have any closing thoughts? You can share with the audience.
yeah, absolutely. So it's a very very holistic kind of approach in terms of while how the whole economy is transforming and which sectors which are getting benefited and what is the focus area in terms of capital deployment and projects and logistics, whether it is logistics, whether it is EVs or clean tech, or whether it is financing of all these initiatives. So that comes together in the form of Omni Bharat Amrit Kaal. And that's where that's how we have created it. So it's a very interesting product for people who want to allocate capital for long-term wealth creation. And as Vikas said, like it's a fantastic way to grow your wealth with as Bharat becomes really a wealthy nation, and not just like a top five, but also a wealthy nation. And with those thoughts, very happy Diwali from me again. And thank you so much for joining us.
Happy Diwali.